There is no capital. There is no, the money markets shut down. The capital markets shut down. There's no liquidity. There's no leverage. Also, all of the assets that circulate on those capital markets are, for the most part, currency derivatives. So under the best of circumstances, they're USD currency derivatives that are bleeding 7% of their economic energy a year. So what you have is capital markets available to 2% of the world. There are gatekeepers that, there are circuit breakers. So the only capital market that is 24/7, 365 that's functioning is Bitcoin. What you have here is you have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, where the capital has a useful life of 10,000 years, not 10 years. It works for anybody, right? It works for anybody at any stage in the hierarchy. There's nothing more valuable than knowing where an asset is going to be in 20 years.
Saylor begins by painting a stark picture of the current state of traditional capital markets. According to him, these markets have effectively shut down, leaving no liquidity and leverage. This paralysis, he argues, is due to the nature of the assets circulating within these markets, which are predominantly currency derivatives. These derivatives, particularly those tied to the US dollar, are losing value at an alarming rate, bleeding 7% of their economic energy annually. This situation is exacerbated by the fact that only 2% of the world's population has access to these markets, which are tightly controlled by gatekeepers and fraught with circuit breakers that can halt trading at any moment, as seen in recent disruptions in the Tokyo Stock Exchange. The US Treasury bill, traditionally the world's most secure capital asset, is also failing to function efficiently on a 24/7 basis, highlighting the limitations of the current financial system. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
There is no capital. There is no, the money markets shut down. The capital markets shut down. There's no liquidity. There's no leverage. Also, all of the assets that circulate on those capital markets are, for the most part, currency derivatives. So under the best of circumstances, they're USD currency derivatives that are bleeding 7% of their economic energy a year. So what you have is capital markets available to 2% of the world. There are gatekeepers that, there are circuit breakers. Like, look what happened the other day where the Tokyo Stock Exchange, the futures ripped up and they shut down the futures market. It shut down the stock exchange, right? And look at the bond markets. The number one capital asset in the world is the US T-bill. It's not liquid and functioning 24/7, 365. So the only capital market that is 24/7, 365 that's functioning is Bitcoin, right? Bitcoin is digital capital. It is open to the entire world. It is egalitarian. It is programmable. It's intelligent, right? And in that particular, and it's true, right? It is, and that makes it very volatile. But the volatility attracts market makers. And that's why someone will actually post $20 billion of collateral and they'll give you $20 billion of liquidity on Sunday afternoon during the worst financial crisis of the year. On a day when everyone else is afraid to do anything, you can actually find billions and billions of dollars of credit or liquidity. If you actually needed to travel to Tokyo and on Sunday afternoon, someone held a gun to your head and you needed to liquidate 25% of your assets for cash, in an hour. You can do that with Bitcoin. You cannot do that with bonds, equity, real estate, gold, diamonds, fill in the blank. There's, you probably couldn't even do it with a lot of currencies, right? The banks are closed. So what you have here is you have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, where the capital has a useful life of 10,000 years, not 10 years, right? Where the impedance to the transfer, is theoretically close to zero, other than, whatever taxable issues pop up depending upon your domicile. And that's the world that we're building right now. That's the opportunity. And so the reason I'm laser-like focused on Bitcoin is I think within 30 years, it's very reasonable, within 30 years from when Satoshi launched that network, you could actually introduce a $100 trillion digital capital market that takes us from a 2% solution to a 100% solution, that takes us from a 10, 20-year duration economic life expectancy to a 10,000-year economic life expectancy. If you're an individual family and you've got a bunch of real estate and you could borrow money in a government subsidized mortgage for 30 years for 3% interest, and that was the case in the US 2 years ago. If you could do that and you bought Bitcoin appreciating at 55% a year, it would be a pretty good idea to borrow €1 million or $1 million, pay 3% interest for the next 30 years, and then invest it in an asset that's going up faster than 3%, right? In fact, that's how you get rich. I mean, that's the number one way you get rich. You basically go levered, long, desirable property. Borrow $100 million to buy a $100 million building, and then let inflation drive up the value of the building to $200 million. And now you just made $100 million on $5 million of equity. How do you convert 5 million into 100 million? Well, you have to post 5 million of equity, lever it up with 100 million of debt, buy something that's going to appreciate in value. And so Bitcoin is the perfect merger partner for anybody. And so buy it with cash, buy it with equity, buy it with debt, right? Buy it any way you can. Don't sell it. And that's the big corporate finance idea. And the people that can do it best are private family-run companies with excess cash or credit, public companies, especially cash cows with credit or cash flows. They can do it. Institutions that are allocated to physical and financial assets that are effective, they can do it. A family, a worker. If you work at a McDonald's and you make 10 euros an hour or 20 euros an hour, if you invested in Bitcoin and then you calculate what it'll be worth in 21 years, if Bitcoin goes to 13 million a coin, it's a 200x return, right? So you're making 10 euros an hour, but it's going to return 2,000 euros, in 21 years, discounted back at the conventional, interest rate. And it's like making 1,000 euros an hour working in a fast food restaurant. And so, it works for anybody, right? It works for anybody at any stage in the hierarchy. There's nothing more valuable than knowing where an asset is going to be in 20 years. It's more valuable to know that Bitcoin will go to 13 million in 21 years than it is to know it will go to 13 million tomorrow. You see,
yeah.
If I told you it went to 13 million and it'll go to 13 million in 30 seconds, the valuable thing is the time. I need to know where it's going to, I need to know 21 years in advance because that gives me leverage. Knowing 21 seconds in advance is just a piece of trivia, it's noise. 21 years in advance, that's signal. And so you can do with that what you will, but clearly the reason I'm laser-like focused on it is I can't tell you what you should do for a living. I can't tell you how to solve your personal problems. All I can tell you is how to solve your capital investment problem. And the solution to that is digital capital. And after you've sifted through 10,000 crypto networks, you will realize that the world's greatest digital capital is Bitcoin. And then you've got that as that weapon that you can use to make a better life for yourself.
Saylor reiterates his belief that Bitcoin is the ultimate form of digital capital. After examining thousands of cryptocurrencies and digital networks, he concludes that Bitcoin stands out as the most secure and valuable digital asset available. He sees Bitcoin as a tool that individuals, families, and institutions can use to secure their financial future in an increasingly uncertain world. He also points out that Bitcoin is slowly demonetizing traditional capital assets like real estate, equities, and bonds. These assets, which currently represent a $400 trillion market, are being challenged by Bitcoin's superior characteristics. Saylor argues that as Bitcoin continues to grow, it will absorb more of this market, eventually becoming a dominant force in global finance.
Bitcoin is capital. And Bitcoin really is demonetizing real estate, equity portfolios, and bond portfolios held as capital. And that's a $400 trillion addressable market, and Bitcoin is 1/400th of it. And so, if you're going to pick a fight, why don't you just pick a fight with gold and buildings and companies that have overpriced stock? They're not going to arrest you, right? They don't have armies. And the truth is they're really the enemy. I mean, the enemy is I invested $400 trillion into real estate, buildings, and overvalued companies, and I could have just put it into Bitcoin, and Bitcoin would be worth $400 trillion instead of $1 trillion. So why don't you just focus upon that? Because eliminating banks and eliminating the government comes with a lot of other problems. Like what are you going to do when the government collapses? My base case is Bitcoin grows, an ARR at 29%, and even if it goes to 13 million a coin over 21 years, 13 million is a lot, right? I mean, if you're looking at where Bitcoin is today, and it goes to 13 million, it's a 200x. Bitcoin would still only be 7% of the world's wealth.
Yeah, dollars much larger,
and,
right?
Bonds will still be larger, equity will still be larger, real estate will still be larger. I happen to see that there's a dualism in the world that will continue. There will be currency, digital currency, and there will be digital capital. And I believe that digital currency will be whatever is designated as legal tender by the dominant nation states of the world, right? For the reason I pointed out, the tax reason. If China and the United States designate the CNY and the USD as legal tender, then you're going to be able to oscillate it at high frequency in an economic transaction with no taxable event. And so it's going to be the dominant currency asset.
Saylor predicts that Bitcoin will grow at an annualized rate of return R of 29%, reaching $13 million per coin over the next 21 years. Even at this value, Bitcoin would only represent 7% of the world's wealth, leaving plenty of room for growth. He believes that the world will continue to operate with a dual system of currency and digital capital, where currencies like the US dollar and the Chinese yuan will serve as legal tender. While Bitcoin will be the primary form of digital capital, Saylor's base case is not about overthrowing governments or eliminating traditional financial institutions, but about providing a more efficient and equitable financial system through Bitcoin. He sees Bitcoin's potential to coexist with traditional assets, while also offering a superior alternative for those seeking long-term capital preservation and growth. Please like and subscribe my channel.